Hello, and you're watching The Week Ahead with myself and LCG head analyst Brenda Kelly. Now we're here to discuss the week beginning the 16th of May for the economic calendar. Brenda, what's on your agenda for next week?
Well, I think ultimately we'll be looking a lot at the US data. Now, certainly there's a lot of data pertaining to the UK, but a lot of that will really get mixed up with regards to Brexit. And until we get a clearer picture on how that outcome is going to be, I'm not so sure the bias is going to be anything but down for the sterling crosses. So ultimately, I'll be looking at US empire manufacturing. It was negative from August 2015 through to February of this year, but it may well have picked up. And this in addition to quite a good retail sales number from the US could put the dollar on a more even path. If you look at the dollar index at the moment, it's actually showing an inverted head and shoulders pattern, which at this moment in time, if we break through 94.70, could target 96 at the actual minimum. I'm not ruling out a Trump tantrum on the US dollar in the coming months, but certainly I think a lot of the macro data pertaining to the US is probably looking a little bit better. We've got US housing starts as well coming up on the Tuesday, and that's likely to see an annualized pace rising from 1.14 million to 1.14 million from 1.08 million. So all of this, coupled with industrial production, could be quite bullish for the US dollar. When it comes to the UK then, inflation again is something that is, looking a little bit better than, you would expect. And certainly with the weaker sterling and the stronger oil prices, we could obviously see the leading CPI index rising 0.5% year on year and possibly even beyond that. So, the Bank of England has actually said they thought it's going to be 0.3% year on year for April, but given current conditions, that could be a little bit conservative.
Mm-hmm. What about Japan? We've got Q1 GDP from Japan on Wednesday. Anything interesting regarding that?
Well, Japan do insist that they're on the right track in terms of hitting their inflation targets, and they're really anything but. We've had a lot of warnings from the Bank of Japan in respect of some FX intervention should the yen strengthen too much, and that has led to a lot of choppiness in both the Nikkei and the Japanese yen crosses. This is going to show a fairly lackluster growth, 1.1% slide in the Q4 of 2015, and private consumption might actually give a bit of a rebound there, but the consensus for the year is for a 0.3% growth. Not great, but certainly is better than some economies around the world at the moment.
Last week you gave a technical outlook on euro, pound and also gold as well. What's on your radar in terms of any interesting FX or commodities?
Well, as I said, we have the FOMC minutes next week. We also have the ECB minutes, and I think we'll get a little bit more clarity as to what Mario Draghi said. He did mention the possibility of even deeper negative interest rates. So that, for me, would leave me looking at euro dollar. Now, I normally would try and do a different euro cross or a different dollar cross, but at this moment in time, it does seem like the bearish outlook is set to continue. So the resistance level comes in around the 114.15, and breaking down that 113.60, which we've done today, it does put us on a path towards that 112.20. I don't expect anything lower than 110. That would be my base sort of level for euro dollar, and I would expect consolidation around the 112 level for now.
Okay, just to wrap up, we were talking about UK inflation earlier. The labour market, we've got some employment figures coming out for March and April. Are we expecting much surprise in terms of growth here or not?
Not really. We will obviously expect to see that the 5% unemployment rates remain the same. So we're pretty much full employment. But essentially we have seen a lot of anecdotal evidence that people are holding off on making new hires ahead of this Brexit referendum. So there's a possibility we could see a slight miss there. And certainly the outlook over the next couple of months might be a little bit sensitive in depending on what actually happens. But as I said, the pound, I do feel now at the moment it's trading in or around that 143.50 or thereabouts. There's a possibility it could drop back down through that 143.50 down to 143, even 142.70. But as it stands, it will all depend on what Brexit poll we get out in the coming days, and that will maybe give us a little bit of a different direction. Certainly Mark Carney's speech yesterday gave us very little, sort of incidence as to whether or not it was going to be a good or a bad thing. It was either going to be bad or very, very bad. And you would expect that some people might listen to Mark Carney, given that he's not a political body and shouldn't really have an agenda.
Okay, Brenda, thank you ever so much there. That's Brenda Kelly wrapping up the week ahead. Join us next week. Have a lovely weekend. Goodbye.